So, Paul, if I look at the markets yesterday, I mean, this is the real. So, I mean, great title, bleeding, the biggest single drop in 9 years. And it hasn't ended in the equity market. We're seeing a Japanese ETF go for another 5–6% on the downside. The question is, have markets overreached given his quite demonstrative denial?
Yeah, well, look, for a start, there's a lot still to come out, I think, here. You know, we don't know all the details. He's denying it. He's not saying that he's going to go anywhere. Well, he's saying he's not going to go anywhere. Well, certainly haven't heard the tapes. Nobody.
The tapes haven't surfaced.
Has got a hold of them yet. But what I would say is markets had been kind of sleepwalking almost towards some sort of blow-up. The volatility measures across the world have been very calm. People have been enjoying the carry. Brazil had been one of the best performing assets over the last 12 months going into this. It looked like inflation was under control, it looked like the economy was turning around, and this really came out of left field. It was a shock, and because of that, obviously the reaction in markets was magnified much more than perhaps is even justified if you can expect that there's enough political will to put this behind, or at least to put this crisis and the scandal behind and to move on with the economy. So I think, you know, kind of knee-jerk reaction, one-day move, extreme. Let's see whether it can follow through into the following.
Because there was an important reform agenda going on, wasn't there, in Brazil? Is this a Black Swan event then for global markets, Paul? I ask this tentatively because when you use
at the moment.
When you use the phrase Black Swan in the wrong context, you get messages. I can tell you. So, I mean, does this fit your definition of a Black Swan event?
Well, I would say it was unexpected, certainly, and hence the enormity of the market reaction. And there was plenty of contagion as well. Actually, it was quite interesting to watch the farm market, soy, sugar exports from Brazil, very important, of course, that also saw a big down move. But, you know, kind of, I think, what's the contagion risk beyond Latin America and some of those smaller markets? Probably not enough to really upset the global markets. The thing is, it came at a very bad time because there's all the turbulence going on related to the American administration as well.
Let's just bring in Patrick into the conversation. Patrick Dobson from Plurimi. You know, it's as if you didn't have enough to deal with north of the border. Suddenly you're looking at a deja vu of Dilma Rousseff's impeachment last year. We're not at that stage yet. This kind of overreaching by the markets, when you see markets overreach like that, do you think, right, I want to investigate whether there's any value here, a drop of 9% in the currency, the biggest. This was one of the most successful carry trades in FX of 2017, and it has literally turned on a dime, buying Brazilian real and funding it in dollars.
Yeah, I think the next 2 days will be very important for Brazil to stress the importance of the structural reforms. Even if there is an impeachment, we know Brazil can deal with impeachments. It's not been too far in its history that it might have to deal with two if things go terribly wrong. But the important is the structural reforms, and that no matter what happens, if there is a new president, we're still going to get those, and the public finances are going to be addressed. It does look like an overreaction. The fact that he's denied it twice, I don't know if that's a good thing. Usually if you deny it once, they say that's good. When you repeat it several times, maybe he's protest too much. But 7% moves a lot on a day. Inflation is under control. If the structural reforms get kept in place, it is a very good carry trade, and probably does merit looking at picking up the dips here.
Yeah, because the background here, Paul, was that this was, the Brazilian economy was showing signs of improving, inflation under control, signs of economic recovery. The reform bill was advancing through Congress. So there were reasons to be cheerful in Brazil as an investor.
Yeah, absolutely. And it kind of felt like it was taking the rest of Latin America with it, you know, is one of the reasons that part of the world seemed pretty settled. You know, it wasn't just Brazil that was hurt yesterday, the Argentine peso, another particularly good carry trade this year. Let's just
pull up the WCRS, because you begin to see the kind of emerging market trades. And we've touched on this a couple of times this week. I mean, there is the peso.
This is year to date.
This is year to date. I mean, I can flick that over to the day. But in terms of looking at the market, there's the Brazilian real. You can just see the hammering. It's gone from sort of like, what, hero to zero in a matter of hours. Yeah, for emerging markets, Patrick, for you, when you look at the broader context, you look at the won, you look at the rupiah, that contagion effect that Paul talked about, it's very prescient, isn't it?
It is, and that's the risk. You're picking up pennies in front of the steamroller is what you're getting. You're getting a carry, and there's risk with emerging markets, and it's just people have been forced into trades that are riskier because it's very hard to generate real returns in developed markets because you're losing real value by investing in government bonds in the whole developed world, really.